InvestorIdeas.com podcast.
Good afternoon and welcome to another episode of InvestorIdeas.com podcasts. In today's podcast, we'll be looking at two public company announcements from Aurora Cannabis Incorporated, trading on the TSX and the New York Stock Exchange as ACB, as well as looking at MCUR Health Incorporated, trading on the CSE as MCUR and the OTCQB as MCURF. And lastly today, we'll be looking at some of the Canadian cannabis product recalls over the month of January, which do include HEXO Corporation, trading on the New York Stock Exchange as HEXO and the TSX as HEXO, as well as the Agrogreens, Shelter Cannabis, and Delta 9 Biotech. So first today, starting with Aurora Cannabis, who announced it's entered into an agreement with a syndicate of underwriters led by BMO Capital Markets and ACB Capital Markets, under which the underwriters have agreed to buy on a bought deal basis 12 million units of the company at a price of $10.45 per unit for gross proceeds of approximately $125 million US. Now, each unit will be comprised of one common share of the company and one half of one common share purchase warrant of the company. And each warrant will be exercisable to acquire one common share of the company for a period of 36 months following the closing date of the offering at an exercise price of $12.60 per warrant share, subject to adjustment of certain events. Now, the company has granted the underwriters the option, exercisable as the offering price for a period of 30 days following the closing of the option, to purchase an additional 10% of the offering to cover up over allotments, if any. And this option may be exercised by the underwriters for additional units, common shares, warrants, or any combination of such securities. Now, the net proceeds of the offering will be used for general corporate purposes, which may include optimistically reducing debt. The company believes that the offering fits with its broader strategy to have a strong balance sheet while maintaining maximum flexibility to invest and build towards building a leader in global cannabinoids. Now, the closing of the offering is expected to take place on or about January 26, 2021, and will be subject to customary conditions, including approvals from the Toronto Stock Exchange and the New York Stock Exchange. So, you can also find out more information at cedar.com, www.sec.gov, as well as auroracannabis.com, and there's links attached in the article there. So, obviously not the first time we've seen BMO Capital and ATB Capital come into the cannabis markets, but it is a good sign for where investors as well as large-scale capital investors are viewing the cannabis industry again, which is with a lot less skepticism and insecurity about this industry. $125 million going back into Aurora Cannabis obviously will help them a little bit throughout the year, dealing with anything strategically and financially over the next few months. Obviously, they do have their own issues when it comes to their debt financing. That being said, though, I would expect that you're going to see a few other large-scale bank capital market companies jump into the cannabis sector over the next couple of months in this year. I would expect you'll see it from a few of the other large-scale producers in Canada, so looking at Afria, looking at Canopy Growth, as well as a couple of the other ones that are starting to approach, looking at Valens as well. And in the U.S., there's a lot of potential there. There's a lot of expectation this year that, again, there's going to be access to banking and access to more capital for the U.S. cannabis market. You're continuing to see articles on a daily basis with expectations or sort of how that's going to affect the industry over the next coming months. A lot of hype surrounding the Biden administration right now. So it will be interesting to pay attention to of who's going to be jumping in first and how aggressively and how much this does affect the overall industry. But definitely is a good sign to be seeing right now that, again, you're seeing these financial institutions quite confident in investing serious funds back into some of these larger cannabis companies. Aurora has obviously been one of the better of the large-scale producers within Canada right now. That being said, they're a company that has had as many issues as most of the other large-scale producers as well. Next, looking at MCUR Health Incorporated, who announced its inclusion among 17 psychedelic companies in the first-ever psychedelic ETF, Horizon Psychedelic ETF, is expected to commence trading on January 26 under the ticker symbol PSYCH on the NEO Exchange. Now, the ETF includes companies in the Canadian legal psychedelics industry, as well as U.S. companies engaged in legal activities involving psychedelic drugs and substances. And the purpose of the ETF is to invest in and directly derive revenues from the companies and psychedelics. We're honored to be selected as part of the first ever psychedelic ETF. This is a milestone moment for our company and for MCUR as we continue to explore, develop, and commercialize products to give hope to the healing of the world in pain and suffering from mental health crisis. This solidifies our position among peers and gives us investors a great opportunity to support our industry as a whole, said Kelsey Ramsden, President and CEO of MCUR. We congratulate our peers and believe it is a privilege to build a new category of care and investment together. Good step for MCUR, and only a matter of time before you saw several psychedelic-based ETFs, or at least cannabis-based ETFs that included more psychedelic companies. I do think for right now, when you're looking at the psychedelic public market space, most of these companies still trading on lower OTC markets, not really doing that aggressively right now. Again, you're not really expecting any sort of revenues or real generation of income from any of these companies for probably another 2 to 3 years, unless regulations change much more rapidly than anyone's really anticipating. Again, there's some expectation of potential changes for psilocybin, LSD, ketamine in Canada in the next 2 years. There's some expectation around ketamine and psilocybin in some states over the next year, but realistically, it's going to be quite some time before you're going to see any of these psychedelic-based companies really generate any even usable product that can go out into the markets medically or in any sort of other fashion. So I do think that'll be an interesting ETF to pay attention to. I also think that as much as it's a good thing for MCUR today, there's only a handful of psychedelic public companies at this moment, so to be included in that ETF, I would say is pretty much essential to any of these psychedelic companies if they want to be taken seriously right now. To not be included in that 17 psychedelic companies, there can't be more than probably 25 right now that are actually publicly trading, and I think that might be an overestimate. So hopefully, if you're a psychedelic public company right now, you're included in that ETF. Again, that's going to be pretty crucial to being paid attention to over the next coming years, as I do think that the ETF route is going to be quite beneficial to that particular section of the industry for, again, over the next 2 to 3 years. While a lot of these companies are still in the research and development phase, that's where they're going to be staying for, again, quite some time until you see rapid changes in regulations. And that doesn't look to be happening too quickly. There's still a lot of attention that needs to be paid to the cannabis industry. That's going to slow down regulators when they're paying attention to next generation products like psychedelics. So again, the ETF, I think, is quite valuable. I think it's quite a good step for MCUR, but take that with a grain of salt that, again, if you're a company that isn't included in that ETF right now, you're not going to be looking too good or going to be in the public eye much. So lastly today, we're going to be looking at some of the Canadian product recalls over the month of January. Obviously, most investors focus pretty heavily on company financials as well as company news. Focusing on product recalls is not the most lovable segment of the cannabis business considerations, but it is something that happens quite frequently, especially within the Canadian market, and happens maybe less so in the U.S. markets due to inconsistencies in regulations going state by state. So a lot of these companies aren't as highly regulated as they would be in the Canadian market. And this will be something we'll have to anticipate when you're looking at more advanced and even higher regulated markets. For instance, looking at EU marketplaces, looking at even Latin America, there's a lot of pretty stringent regulations on product quality, consistency, labeling, packaging, etc. Mislabeling tends to be one of the most common recalls that you're seeing within the Canadian cannabis space due to basically not being able to hit certain THC, CBD, terpene profiles, etc. Another one that's a little less common is mold, but it does happen. And then as well, the first one we'll be talking about today, which is from HEXO Corporation, is due to disposable vape pens being defective. So on January 12th, HEXO Corporation had a product recall announced by the Ontario Cannabis Store online retailer, which impacted 3 types of disposable vape pens. HEXO commented to Marijuana Business Daily the vapes were sold in Alberta, Manitoba, New Brunswick, Ontario, and Saskatchewan, as well as to medical cannabis patients. And the producer attributed the recall to a mechanical hardware defect in which prolonged auto-ignition may lead to excess heat in the battery cell, which can turn these into a melting plastic shell. So, as an immediate corrective action, HEXO has implemented enhanced third-party hardware approval criteria, including the use of independent third-party accredited labs to assess all devices under consideration. That was Shannon McCoy, HEXO Vice President of Quality, wrote in a statement. And HEXO expects the financial impact of the voluntary recall to be minimal and well within the normal course of business. Now, what's interesting to note is that on the same day of that recall, HEXO stocks actually took a massive rise. And over the last 12 or so days in the month, have actually seen a steady uptake. So again, it does go to show that very few investors are really paying attention to product recalls or considering much when you're looking at these company profiles, because again, on the same day that this product was recalled, the stock actually took a massive dive upwards. And unfortunately, that's one of the only public companies I'll be talking about with product recalls today, but it does show an example that, again, within this space, there's a lot of attention not being paid to essentially to what actually is the feedback to the products that are hitting the market and what's the overall consumer perception of a lot of these products. Again, you can say a recall is quite a minimal impact to the overall financials, and it absolutely is because of the scale of products that they're pumping out. That being said, public perception of your company could change dramatically by having a vape pen explode in someone's face or melt and damage their hand, especially going to medical patients. There's a lot of risk attributed with that. And for any of these companies, this is still a huge factor that affects their overall brand perception and overall consumer sort of perception of their products. Is if you are recalling products, even if it's just one, even if it's only one time a year, a lot of people are going to remember that, especially a lot of the retailers who are dealing with you and dealing with your reps, dealing with your products on a daily basis. One recall a year is enough to start reconsidering which products you carry and which producers you want to partner with, especially when we're looking forward to the potential of a lot of private retailers having access to direct buying from producers. That's going to be possible in BC in the next year to two. And in a lot of the other provinces in Canada, that looks to be the business model that could impact the industry quite significantly moving forward, is allowing access for private retailers to buy directly from producers, as opposed to having to buy from, the Ontario Cannabis Store, the BC Cannabis Store, etc. And once that starts coming into play, the quality and consistency of the products that they're going to be producing is going to really start mattering. And again, having any product recalls is going to be a big impact that needs to be taken pretty seriously for many of these companies. And again, it's going to be tough to sort of regain your confidence and reputation from both the distributors of your product and the bud tenders who are selling your products, as well as the consumers who are buying them. So again, defective vape batteries, it is pretty common within this industry right now, looking at all the 510 thread batteries and distillate cartridges that are out there, them being defective, damaged, exploding, etc. As much as I'd love to say HEXO stands alone in that, every single company is producing pretty shit quality 510 thread cartridges. Most of them are quite janky, made in China, and pretty cheap. And the downside to that is even the cartridges, the distillate tips that a lot of people are using are, again, still quite low quality in caliber. You're starting to see this change a lot from a lot of the premium extract producers. They're really focusing on the quality of their distillate tips, the quality of their 510 thread batteries that they're trying to partner with. That is starting to be paid attention to, but for especially the disposable ones, it's pretty dicey. A lot of them are quite defective quite consistently. And until you start to see, even with that in mind, the amount of defective products that are out there, consumers are still buying these. And a lot of them are just complaining but buying more. It'll be interesting to see how that changes over time, if that does change, and if the disposable vape pens, I find, is going to be something that will probably be discarded over the next couple of years as the industry advances. It's just a form and function problem waiting to happen. But again, it'll be interesting to see how that develops over time. So on January 7th, the Agro Greens had a recall issued by Health Canada, which affected 752 units of North 40 Black Cherry Punch cannabis bud sold to medical cannabis clients via mail and by recreational cannabis retailers in Saskatchewan. The affected product may contain mold, Health Canada said in the recall notice, adding that Agro Greens had received 4 complaints about the lot and 1 report of an adverse reaction. So this is an interesting example because this shows how much the actual consumers are starting to be the main people who are actually flagging these products. So this was flagged by one grower in North 40 Cannabis, who flagged the mold issue to the public in a December 27th tweet. All environmental conditions were on point throughout the drying and curing. North 40 noted in its tweet, and it looks like a very isolated incident. That being said, it's still coming from Twitter and as well from a Reddit message. which David Purcell, the Chief Revenue Officer at Shelter Cannabis, found, who was in the process of acquiring AgroGreens. So, again, the value of consumer feedback, of consumer perception of your products can't really be understated within this industry right now as it continues to develop. This is the difference of make or break for some of these brands, especially for smaller brands. For instance, AgroGreens, not a massive brand in a ton of provinces, so them being impacted even in a small sense is going to be noticeable. So again, it's not a most common thing with mold, but it does happen occasionally. And again, most of the time, this is being flagged by either the bud tenders or, purchase order managers from retail stores who are noticing this product and sending it back to either the BCLDB or Ontario Cannabis Store, etc. Or a lot of the time from the consumers themselves who are then bringing these products back to the stores. And again, if it gets to the consumer at a lot of those points, because not every single retailer who's out there right now is actually opening a significant portion of their products to test quality check before they're selling products to the market. Very few do that, actually. In fact, the majority of them, it's in their best interest to not open anything or check anything in advance. So that way they have, some sort of deniability or no accountability to the product quality. But again, once it hits the customer and then they're bringing that back to your store, it's pretty tough to turn that customer around on any of the products produced by that producer. So it does have, again, a significant impact. And one of the last recalls issued, or not one of the last, but another one issued on January 8th, involved 600 units of cannabis bud with erroneous THC and CBD values, 3.5 gram packages of Oceanic Seabreeze cannabis grown by Delta 9 Biotech of Manitoba and sold at Newfoundland and Labrador had incorrect cannabinoid values. So the labeled total THC and total CBD were higher than the actual values, said Health Canada's recall notice. And again, inaccurate cannabinoid labeling has been the majority of cannabis recalls in Canada since recreational legalization in 2018. Some examples of companies that have been hit by that: Aurora Cannabis, a subsidiary MedRelief, Sundial Growers, Ag Medica Biosciences from their beverages, and ingestible cannabis oil from Voyage Cannabis, just to name a few. Again, not calling these companies out as being any worse than any of the other ones. If you look into most of these companies and you're paying attention to recall notices coming from the BCLDB, coming from the OCS, you'll notice that a vast majority of these companies get hit with at least one recall notice a year on a significant number of products. It's a lot more common, unfortunately, within the Canadian industry. And this does come down to some issues with regulations. When you are looking at label packaging, it is quite difficult for a lot of these companies, even a very well-versed grower, to be hitting these exact notes for CBD and THC and having them consistent across their entire plant biomass. And eventually I do think that regulation will be changed or at least delineated a little bit differently, as well as you'll start to see a focus higher on terpene profiles and less so on just CBD and THC content, because as we're starting to notice as this industry evolves and again consumer awareness and intellect increases, that it's not just the THC and CBD content that affect the overall high. The terpenes, the entire cannabinoid profile of that plant is what's most significant. And looking at a terpene spectrum chart is a lot more significant and more valuable of an assessment of what this plant is going to produce as far as effects, as far as potency, as far as how it's going to interact with you on an individual basis, than just looking at THC and CBD content, especially when we're looking at the distillates and isolate categories, where the vast majority of them could be direct, yeast cultured THC or yeast cultured CBD or isolates with artificially, created terpenes. That as well is going to create a whole different set of effects and overall flavors and high than, for instance, a full spectrum product or a partial spectrum product. So I do think that those types of categories for labeling are going to become more significant. Hopefully those will be some of the regulation changes we see over the next 2 years within Canada. But for right now, again, mislabeling of products, you're going to see a lot of products get recalled for that. I wouldn't say that's as much of an issue, just because there are ways now that companies are able to mitigate some of that damage. A big way that a lot of them have, for instance, with Sundial, is they've focused on having their bulk product, which is in a different range of THC and CBD labeling. So for any of the products that are not hitting sort of the standards they need for maybe small gram formats, For their larger gram formats, they can actually kind of bend around those rules a little bit. Also, turning products into extracts has been another sort of move of avoiding some of that, but with extract products hitting the market that aren't hitting any of these quality controls, again, that's going to have some pretty negative long-term connotations for the brand building of some of these companies. That's all for today's podcast. Enjoy the rest of your weekend. That's all for today's podcast. Podcast is now a certified word trademark on the blockchain through Cognate Incorporated CM certification. InvestorIdeas.com podcasts are also available on iTunes, Spotify, Google Play Music, Stitcher, iHeartRadio, Spreaker, and TuneIn. If you'd like to be a guest or sponsor of this podcast, please contact InvestorIdeas.com. Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website, and this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investments involve risk and possible loss of investment. Investor Ideas does not condone the use of cannabis except where permissible by law. Our site does not possess, distribute, or sell cannabis products.